Start by reciting Surah Al-Fatiha. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. Ar-Rahmanir Rahim. Malik Yawmiddin. Iyyaka na'budu wa iyyaka nasta'in. Ihdinas siratal mustaqim. Siratal ladzina an'amta 'alaihim ghairil maghdubi 'alaihim waladdallin. Amin. Okay, Alhamdulillah. So for today's session, we want to continue with discussion on group structure as well as some items on how the group structure will affect your calculation of goodwill. And also the second part of the class, we will discuss valuation of your NCI. Okay, I posted some items here in Ireland. So I believe you have downloaded or you have printed the materials that I have uploaded in Ireland. I think the first file that I want to discuss is on the group structure. You can refer to your books as well on group structure. I think can you look at chapter 13? I look at chapter 13. So in your textbook, group structure also been discussed. Let me assess on the group. We've gone through the books on group structure. I have discussed that we have three types of group structure, isn't it? Fellow subsidiaries, verticals, as well as mixed group structure. So we discussed group structure, as I said just now, because it has effect. Yes, it has effect on your calculation of goodwill. You need to understand. Okay, the first one is fellow subsidiaries. Okay, this one. We have a parent company here, and it has three subsidiaries. Subsidiary 1, 2, and 3. And this is the percentage of shares purchased in each respective subsidiaries: 60%, 100%, 75%. So we call these types of group structure as fellow subsidiaries. And if you go through companies listed at Bursa Malaysia, majority of them have this group structure. So when I ask you to do your group project, so I want you to look at the group structure. Normally in the annual report nowadays, in the annual report you will see the group structure being presented at the earlier stage of the annual report. So that once you look at the group structure, you understand who are the company, how many companies are under the parent. For our case here, there are three, isn't it? For example, so this one are called fellow subsidiaries. And I think this is the one that you have learned earlier topics, earlier chapter paper. But we may also have this type of company, vertical group structure, where the parent is up there. The parent control 80% of subsidiary 1, and subsidiary 1 controls 60% of subsidiary 2. Okay, so in this case, this is different, right, from fellow subsidiaries, because this is vertical. So if you compare to the to the fellow subsidiary, at this stage you can see clearly the parent's percentage of control, and you also can easily calculate the NCI, isn't it? What is NCI here? Non-controlling interest. This one will be 40, isn't it? 60 to 40. This one, no NCI. And this one, 25. So easy. So you don't have to on your calculator. You just look at it and then, it's that. But for this case, vertical Parent control 80%, subsidiary 1. So what's NCI here? 20. So now, what is the parent control over subsidiary 2? Is it 60? No, it's not 60. This one is subsidiary 1. Control 60% or purchase 60% shares in subsidiary 2. So now, when you prepare the consolidated account, you need to prepare in relation to the parent. You need to look at the parent point of view, not subsidiary 1 point of view. So now, what's the relation between parent and subsidiary 2? So you need to do some calculation. Very simple one. Okay. The parent control over subsidiary 2 is the, okay, yes, this one. Parent control over subsidiary 2, 80% times 60%. So parent control 80% times 60%, so that is 48%. So that is the parent interest in subsidiary 2. How we calculate it? Very simple. Parent control subsidiary 1 80% and subsidiary 1 control subsidiary 2 60%. So 80% times 60%, so that is 48%. So once the parent controls 48%, the balance 52% NCI, because we only have two parties controlling the subsidiary, the parent and we call non-parent or NCI, non-controlling interest. Right? Okay. So now, parent has 48%, NCI 52% in subsidiary 2. NCI is bigger than parent. Can it be like that? Is the parent still control subsidiary 2 in our case here? If you look at the percentage, 48, 52, NCI is bigger than the parent portion. Who the one who control now subsidiary 2? Is the NCI or the parent? Still a parent. Still a parent. So this is still a subsidiary of the parent. Once this is a subsidiary of parent, it means the parent control. Because if you control, it becomes subsidiary and you consolidate. You don't control, it is not your subsidiary and you don't consolidate. But I'll tell you that this is a subsidiary of the parent. So the parent has to consolidate these two companies into the parent's account. Okay, and why this subsidiary 2 is considered still subsidiary of the parent, even though of this percentage 48? A subsidiary of a subsidiary is a subsidiary of the parent. Okay, a subsidiary, this one, of a subsidiary, this one, is the subsidiary of the parent. A subsidiary of a subsidiary is a subsidiary of the parent. You understand? A subsidiary, subsidiary 2. Subsidiary 2 is a subsidiary of subsidiary 1, isn't it? So, this subsidiary 2, a subsidiary of subsidiary 1. So, by definition, this is also the subsidiary of the parent. So, as long as the parent has controlled this subsidiary and this subsidiary controls any other company, then this company is a subsidiary of the parent, regardless of the percentage, regardless of the percentage of the indirect shares that the parent has in the subsidiary. Okay. Okay. Now let us look at another example. So now consider this. This is the parent, subsidiary 1, subsidiary 2. This one 75%, this one is, let's say, 60%. So now this subsidiary 2, what's the parent percentage here? What's NCI here? Subsidiary 2. Oh yeah, your mathematics very good, Yeah. Oh, this one 45. Wow. This one 55. Oh, very good, Never mind, I will test you again. So parent is 45 because 75 times 60%, or 3/4 of 60, isn't it? So 45%. So NCI 55. Okay. So how about this one? Put it further up. Hmm. 80%, 60%, 50%. Subsidiary 3 was the parent, was NCI 24. Use your powerful calculator. What? 24. So 80 times 60, 48. Half of 48, 24, isn't it? So this one is 24. So this one NCI 76. So if you look at this percentage, you will find that the NCI is very big. 76, more than 3/4. But this is still a subsidiary of this by definition, because a subsidiary of a subsidiary of a subsidiary is a subsidiary of the parent. So if you look at the relationship between the parent and the subsidiary 3, they are still subsidiary. Even though the parent indirect control is now diminishing, for it only 24%. So if you look at this, for example, this group structure, the vertical one. So at this stage, subsidiary 1, the NCI, this one NCI is 20%. This one is your NCI, how much? Subsidiary 2, your NCI? 52, isn't it? Yes, 52%. This one is NCI 76%. Then you will see that how many NCI we have. You will have the number of NCI that you have depends on how many subsidiary you have. Now you have subsidiary 1, you have subsidiary 2, subsidiary 3. Now you have 3 different NCI. So now you will say that I have 3 different NCI percentage here. So now how that will affect your calculation of goodwill. So if you want to calculate goodwill, you need to prepare the calculation companies by company. So you need to prepare goodwill for subsidiary 1, goodwill subsidiary 2, goodwill subsidiary 3. So how do you prepare how you calculate your goodwill? The schedule. You are using the schedule. You can use many methods, but the one that we need you to prepare in your examination, in your test, final exam, is the schedule format. You can prepare T account. I think last time, many years ago, we did teach students how to use the T account. But now I think the schedule format is more presentable. So you need to get used to preparing the goodwill calculation using the schedule. So let's just go and let's look at how you prepare your schedule. Is actually you have done it, isn't it? You need to prepare this something like this, where you have your goodwill. First, this one is your NCI, isn't it? And then it's normally your group retained profit. You can use short form for an exam, isn't it? So how do you find goodwill? What is the first line? Consideration transfer, isn't it? Or you put it CT lah, because this one is a form. So schedule form, you can use short form. Consideration transferred plus NCI. So you NCI, and then you minus fair value of net asset on date of acquisition. On day of acquisition, on DOA. So the first time I see the word there, hey, what's DOA? Is it? Day of acquisition. Okay. Consideration transferred plus your NCI and minus fair value of your of net asset. So now, if you have 3 companies here, 1, 2, and 3, then you need to prepare 3 times. You need to calculate. You need to do the process time again. So you write here subsidiary 1. Subsidiary 1. So your NCI in subsidiary 1 here, if you are using proportionate, this is the percentage, 20%. So your NCI there will be 20% times the fair value, isn't it? Whatever the fair value amounts there. So I give you an example. Let's say the consideration transferred is 10 million. And your fair value on date of acquisition is, let's say, 8 million. So your 20% here times 8 million, right? Wait. So 20% of 8 million, 1.6. 1600. So the total here will be 11,600 minus the fair value 8 million. So this is your 3,600,000. What is this? Goodwill, isn't it? Goodwill or bargain purchase? Goodwill or bargain purchase? Goodwill. Isn't it? This one goodwill. So this is the goodwill on acquisition of subsidiary 1. Okay, your NCI here is 1.6 million. So you will repeat the process for subsidiary 2. Subsidiary 2, the same thing, consideration transferred, this and this copy. So I have the luxury to copy and paste. You have to write it again, isn't it? Okay, so subsidiary 2 and subsidiary 3. Subsidiary 3, different color. What is it? This one, let's say. Subsidiary 1, subsidiary 2, subsidiary 3. So NCI for subsidiary 2, 52%. Times whatever fair value of the subsidiary of subsidiary 2, isn't it? And for subsidiary 3, the same thing. Consideration transferred and then plus your NCI. So now your NCI here is 76%. Times the fair value, then you minus the fair value of net asset on day of acquisition of subsidiary 3. Okay, so this is how you prepare your schedule if you have more than one subsidiary, regardless of whether fellow subsidiary or vertical. But for vertical, I think the small challenge that you have is to calculate the NCI, because this percentage, 20%, 52%, 76%, is the number that you insert in the schedule. 20%, 52%, and 76%. So if you look at this schedule, you have to calculate the goodwill 3 times, because for each company you need to identify whether you have a goodwill or you have bargain purchase. So far, any question? You understand this? Okay. Some look like this is not new, isn't it? This one is you have done this. Don't worry about the number. Put it 10, no problem. I will calculate 10 times. The same formula. Subsidiary 1, 2 and 3, the same formula. Not different formula, same formula. Consideration transferred plus your NCI and then minus your fair value of net asset of the subsidiary on the day you acquire the control, isn't it? Okay. So if you want to apply this to our earlier case, if you look at this group structure, so we have subsidiary 1, 2 and 3, but we will only calculate for subsidiary 1, subsidiary 3. We have NCI here, and this one you have no NCI. So if you don't have NCI, in this case, you call 100%. Do you calculate the goodwill or not? You still calculate the goodwill, but without the NCI. The formula, when you go to the formula, consideration transferred minus fair value. Understand? We did test last semester. One subsidiary, 100% control. So what happened? So if you have 100% subsidiary, you still need to calculate the goodwill. But the formula now, or you still can maintain the formula. I mean, the formula is still the same. Consideration transferred plus NCI minus fair value of net asset. So that's your goodwill, isn't it? This is your goodwill or bargain purchase. But now your NCI is 0. So the goodwill will be consideration transferred minus fair value of net asset. So that's your goodwill or bargain purchase. You still need to calculate. I still need to identify goodwill or bargain purchase, even though you control 100%. Okay. Okay, so now if you have these 3, 1, 2 and 3, you still need to prepare 3 times the calculation. But for this one, is easier. This one 40%, this one no NCI, this one 25%. So this is the number that you insert in the schedule. When you prepare this schedule, the one I've just shown you, this schedule, you still need to have that 3. 40% subsidiary 1 and 25% subsidiary 3. For subsidiary 2, NCI 0. The same formula, but NCI 0%. So if 0, you don't have to show, isn't it? Okay, understand? Before we go to the yes.
Normally we will get the goodwill, but if the
bargain purchase,
get the bargain purchase.
How do you treat them,
as
the bargain purchase? Okay, good. Let us assume. Okay. Subsidiary 3. Okay lah. Subsidiary 2 lah. Consideration transferred is, let's say, 10 million. Let's say, this one is just hypothetical number, isn't it? Your NCI, let's say, 2 million. And the fair value of net asset is 50 million. So your total here is 12 million. And the fair value of net asset is 15 million. So what happened here? You got negative, isn't it? So that is 3 million. This 3 million negative, we call it bargain purchase. Bargain purchase. So now, what's the difference with goodwill and bargain purchase? Which one is better? Goodwill or bargain purchase? From the parent point of view. So let's say now, you acquire subsidiary 1, you register goodwill of 3.6 million. You acquire subsidiary 2 and you registered bargain purchase of 3 million. Of these 2 acquisitions, subsidiary 1, subsidiary 2, from the parent point of view, which one is better? The one that registered goodwill or the one that registered bargain purchase? Many still will say goodwill. I think the one who did not say anything also say goodwill. Why? Because it's good. Or it says that goodwill is asset. Okay. Actually no. Bargain purchase is better. Because bargain purchase is a gain on that acquisition. Why? Because you pay 12 million, you get 15 million worth of net asset. You understand? You pay, this is what you pay. This is what you pay, this is what you get. This is what you pay, this is what you get. Right? So I pay 12 million to get 15 million. Okay. Bargain, this one is. Right? So if you are the accountant or the account executive in the company, you will insist that we should register bargain purchase. You should bargain for it. For example, I'll give you an example. Sorry, this one. If somebody wants to sell this for $10, you will say, I don't want to pay $10. I'll pay the $9. So this is worth 10 million, but you pay 9 million. How about that? It's good, isn't it? Because you pay less than the value of this one. So that's the case here. Let's say this mineral water, 15 million. Because at Sahara, 15 million. Oh. And you can bargain for it for 12 million only. Then that's good. If you compare with that one, the fair value is only 8 million. Case number one. But you are paying 11.6 million. You pay more. And of course, if you need that asset, of course you will pay at goodwill. You pay more for it. Okay. Yeah. Okay. Now, so what is the treatment for bargain purchase? So bargain purchase, I need all my students to register this bargain purchase under this column, because this is a gain that will be registered by the parent. So if you have bargain purchase, straight away you put it under this, under this section, group retained profit. The group retained profit. All bargain purchase only, not goodwill. Goodwill will remain there. But for bargain purchase, you need to register it there. Why? Because there's a tendency that you will forget to register or to record that in your schedule. Alternatively, or majority of you must still remember that if you have bargain purchase, you can record in the schedule. Let's say we have this schedule. I'll draw this schedule. This is group retained profit. This is NCI. This is your goodwill. So when you prepare the retained profit of parent. Sorry, not this one. Retained profit. Sorry, this column. You have retained profit parent, one amount, and after that you do all the adjustments in it. What are the adjustments for retained profit? The normal one. What are the? Yes, minus URP. Any more? For parent? Yes, dividend. Some says dividend. What else? Yes, depreciation, for example. And you should add here bargain purchase. So that bargain purchase should be recorded here. But I'll tell you, there will be students who forgot to add this in the parent column. Why? Because you will calculate this bargain purchase at the beginning of the question. You read and you calculate, you get bargain purchase, but you don't record it. And when you do this, the retained profit of the parent, you do the adjustment, and then the period between calculating this and this could be after 40 minutes, after 45 minutes. And normally students forgot about bargain purchase. So at the end, you don't record. And what happens if you don't record? You lose the mark. And then you become not stable, because my account is not balanced. Where is it? Where is it? Where is it? So I want you to straight away record it. It's the same thing. Either you record it here, either you record it here, or you record it here. 3 million. This one. Bargain purchase 3 million. Either one. Either one. But I want my student to record immediately here. 3 million. It's the same effect. The same effect. Either you put it here, 3 million, or you put 3 million over there. It's the same effect, either one. But I don't want you to lose that mark. So that immediately, if you have bargain purchase, straight away put it under group retained profit, and you don't have to worry when you prepare your group retained profit. Okay, you understand? Sir, what happens if I still record here? I don't want to record there. Okay, no problem. I won't penalize you. But hopefully that you remember that there's bargain purchase, then you have to record that. Okay, good question. Bargain purchase. Okay, now let's move to Pretty fast already. Let us look at the group structure. We have the first type, this one, fellow subsidiary, and then vertical, and the next one is mixed group. This is an example of mixed group. Mixed group means mix of the vertical and fellow subsidiary. So if you look at this group structure, originally the parent has one subsidiary where it controls 60%, and later on subsidiary 2 where it controls 55%. So if you look at this stage only, it's fellow subsidiary, isn't it? Fellow subsidiary. But later on, subsidiary 1 acquires subsidiary 3, 80%. So now you have fellow subsidiary, you have something like a vertical, and the parent also control 10% of shares in subsidiary 3. So this is the mixed group, overseas mixed group. Okay, now the same problem here at subsidiary 3. What is the parent control of subsidiary 3? This is how you calculate it. Parent control of subsidiary 3 is 10%. Always start with the direct one. This one is called direct control, because parent directly purchase share in subsidiary 3. Okay, the direct control plus the indirect control. The indirect control 60% times 80%. So 60 times 80. So 60 times 80, 48. 48 plus 10, 58. So parent control of subsidiary 3, 58, and NCI automatically become 42. Right? So this 42, this is the number, the percentage of NCI that you will put in your goodwill calculation. Goodwill calculation in your schedule. Understand? This one, subsidiary 3. You need to calculate. You need to calculate this. This is the first thing that you calculate. In fact, this is the group structure. In examination, of course, we won't give you this. We give you the story. You need to read, and then you understand. Oh, the parent control subsidiary 1 certain percentage, and then who actually controls subsidiary 3, or subsidiary 1 controls subsidiary 3 later on. So you need to draw. In your examination, the first thing you do, draw the group structure. Is it fellow subsidiary? Is it vertical? Is it mixed? So once you draw the group structure, then you can see clearly, and then calculate the parent and NCI for those subsidiary which is not immediately under the parent. These two you don't have to calculate. This one, the subsidiary 40%. This one, sorry, NCI is 40%. This one, NCI 45%. It's easy. But for this one, this is how you calculate it. The parent control, again, the direct, which is 10%, and the indirect. This one is indirect. 60 times 80 become 58. So NCI 42. Mixed group. Any question? No question. Yeah. So now I ask you. You calculate now for this group structure. The parent here, very simple one. In your book, similar to this one, subsidiary 1, and then we have subsidiary 2. Parent control 80% of subsidiary 1, subsidiary 1 controls 60%, subsidiary 2, but the parent also has control of 20% in subsidiary 2. So now at subsidiary 2, this, what's the parent? What's the NCI? Parent? 68. Everybody get 68? 68? 68? How do you get 68? Parent is 20, the direct one, plus 80 times 60. Very good. Yeah, this one 68. So your NCI automatically become 32, isn't it? So 68, 32. So the important thing is this one, NCI, because we established 32%. So when you prepare goodwill calculation for subsidiary 2, consideration transferred plus NCI, the NCI has 32% of the fair value if you are using the proportionate method. Okay? Eh?
So how about the 55%?
55%. This one. It's okay. Huh? Parent control 55%, so the NCI will be 45%. So for this case, you will still calculate 3 goodwill. Goodwill on subsidiary 1, subsidiary 2, and subsidiary 3. But for subsidiary 1, your NCI is 40%. This one, your NCI is 45%. And this one, your NCI is 42%. Okay? Eh? So this calculation is true for you to calculate the NCI percentage. All right. So before we go for break, let us look at one group structure exercise. This one just uploaded. Simple one, isn't it? Parent 60, subsidiary 1, and subsidiary 1 60 over subsidiary 2. So what's the parent control over subsidiary 2? 36%, isn't it? 36, and the balance is your NCI, isn't it? Very good. So meaning that you have absorbed the knowledge. Quite simple, isn't it? So this is where you prepare your subsidiary 2. Your NCI will be 64%. Yes, very good. Sorry, make it smaller. Look at this. Now, subsidiary 4. What is that? 75%, 60, 50. 75 times 60 times 50, isn't it? So that's the answer. Whatever the answer is it. Use your calculator. Okay. Subsidiary 4. Now, if I add this, let's say the parent control over subsidiary 4 is 20%. So you just add 20%, isn't it?
Yes.
But never mind, just put it something that looks like, wow, this one very complex, huh? This one not complex at all. Let's say you have 20% parent control subsidiary 4. So parent subsidiary 4, parent will be 20%, the direct one, plus 0.75 times 0.6 times 0.5. So that's the parent control. 42.5%. Okay, 20%, and then the rest. So this is we call it direct. This is direct control, and this one is the indirect control. Okay, now let us continue our discussion for mixed group. Okay, for mixed group. Okay, for mixed group, in this case, mixed group where we have a parent controlling subsidiary 1 and 2, and subsidiary 1 controls subsidiary 3, and the parent also have direct interest in subsidiary 3. So how this will, how you prepare your schedule for this case? Of course, we have 3 subsidiary, then you need to calculate 3 times the goodwill. Goodwill for subsidiary 1, subsidiary 2, and subsidiary 3. So I just want to focus on subsidiary 1 and subsidiary 3. Just forget about subsidiary 2. Put it aside. Assume this. Okay, assume this. This one is something I just write. You don't have it in your original copy. So parent control, we have established 58% in subsidiary 3 and NCI 42% subsidiary 3. So now let's assume that parent paid cash of 5 million to control 60% share in subsidiary 1 up there. And the fair value of subsidiary 1 was 10 million. Number 3, parent paid 1 million to acquire this 10% shares in subsidiary 3, and subsidiary 1 paid 5 million when acquiring 80% shares in subsidiary 3. And the fair value of subsidiary 3, fair value of net asset of subsidiary 3 was 12 million. Okay, let's say you have this information in your test or your final exam. So now, of course, you need to calculate goodwill on acquisition of subsidiary 1 and subsidiary 3. So I want you to do it now. Prepare your schedule for subsidiary 1. Subsidiary 1. Subsidiary 1, parent paid 5 million to control that 60% shares in subsidiary 1, and the fair value of net asset of subsidiary 1 was 10 million. So if that's the case, okay, establish the goodwill or bargain purchase on acquisition of subsidiary 1. Okay, your schedule looks something like this, isn't it? Yeah, the goodwill, NCI and group retained profit, the consideration transferred plus your ends. But you need to write up here the subsidiary, subsidiary 1, so that we know that you are calculating for which subsidiary. In your exam, you need to write the name. Of course, in your test, the final exam, you will be given the name of the company, isn't it? You just write, let's say ABC Berhad or whatever name is it. So so that we can identify which subsidiary that you are calculating the goodwill now. Let's say now for subsidiary 1, goodwill or bargain purchase, subsidiary 1. The consideration transferred 5 million, and the fair value was 10 million. So in your examination, you don't have to write the full 5 million, 5000 and 000. You just can put it the figures in thousand. So you just write 5,000. So 5,000 mean 5 million. Or you just can write 5 million. The amount is all in million. So you just write 5. But you need to be consistent. If your amount all in million, then you just write 5. Or if you want to put it in thousand, then put it 5,000. Because nowadays I think the amount for in your test, final exam, the amount all be given in million. Okay. What's the amount of goodwill or bargain purchase do you have? What's the amount? 1 million goodwill or bargain purchase? 1 million bargain purchase. Somebody said 1 million bargain purchase. How about you? I agree fully. Because I trust my friend. In your exam, you need to do it on your own. So what is it? You get it? 1 million bargain purchase? You get what? Goodwill. Goodwill or bargain purchase? Is it goodwill or bargain purchase? Bargain purchase. Okay, let us confirm it. Consideration transferred was 5 million. The NCI is what? NCI will be 40%, isn't it? Because subsidiary 1 60%. So 40%, typing error. So 40% times your fair value, 10 million, isn't it? So this will be 4 million. And the total will be 9 million. Yes, 9 million. And the fair value of net asset is 10 million. So this is bargain purchase, 1 million bargain purchase. Yeah, and you write it here. And your NCI is 4 million. Okay, so this is the complete answer for calculating your goodwill, also bargain purchase. So in our case here, we have bargain purchase. So if once you have got bargain purchase, I need to write in this column bargain purchase amount. Don't put it in bracket. This one is the amount should be positive here. Even though you get negative here, 9 minus 10 is a negative. Though negative means bargain purchase, but when you write it, this should be positive here. And your NCI, don't forget NCI, whatever amount that you have here, you transfer it here, 1 million. Okay, now, okay, everybody stop and look at how we prepare the schedule for case where the parent has direct and indirect share. Okay, if you look, let us look again at this. Okay, this diagram. The parent has 10% direct control and another 48% indirect control. Meaning that we call it direct because this one is directly purchased from subsidiary 3. But for this route, 80%, 60%, 60% times 80%, the parent controls subsidiary 3 through subsidiary 1. We call it indirect control. Direct and indirect. So now, once we have direct and indirect control, both need to be shown in your calculation for goodwill. So how this is done? Okay, let us look at it. You need to add just one line. So normally for subsidiary 2, and for subsidiary 2, you will have direct consideration transferred, DCT, and indirect consideration transferred, ICT. Okay, to start with, you will have 2 instead of just CT. You will have direct and indirect. So direct to represent that 10%, the 10% that the parent control in subsidiary 3, and indirect represent that 48% that the parent control through subsidiary 1. Okay. Okay, now, and once you have done that, the remaining part will be the same thing. You will plus NCI, your NCI, and then you will minus the fair value of net asset on date of acquisition. Okay, this is the formula. So you just, in this column, you'll see that you have 2 consideration transferred. One is direct, one is indirect. So now, if we have this case where the parent paid 1 million for that 10% direct control, and the subsidiary 1 paid 5 million when acquiring 80% share in subsidiary 3, how we record them? Here, the direct is 1 million, so you just put it 1 million under column direct consideration transferred. This 1 million, what color is it? This 1 million is actually this 1 million. Okay, that 1 million the parent paid directly to subsidiary 3. Okay, now the indirect. So for the indirect consideration transferred, the total amount is 5 million. 5 million. But, okay, when you calculate this goodwill, this is the goodwill that you calculate in the parent account. So when you look at the parent account, parent over subsidiary 3. So even though subsidiary 1 paid 5 million for this, for subsidiary 3, when the parent record to calculate goodwill in subsidiary 3, the consideration transfer is not 5 million. It will not be 5 million. Make an assumption like this one. This is not true. This is not true. It's not in your book. But just imagine like this. Subsidiary 1 acquire 80% share in subsidiary 3, but subsidiary 1 did not have cash of 5 million to pay subsidiary 3. Okay, subsidiary 1 don't have enough that 5 million. So what happened is subsidiary 1 will ask help from the parent. Encik parent, please help me pay that 5 million to subsidiary 3. How much do you think the parent will pay to subsidiary 1 to assist subsidiary 1 acquire subsidiary 3 that 5 million? Do you think the parent will pay 5 million? No. Why? Why the parent will not pay that 5 million? Okay, again, my question. Some are not, some just look blurred. Look at this fact. I'll say that number 4. Subsidiary 1 paid 5 million when acquiring 80% shares in subsidiary 3. Assume that subsidiary 1 did not have that 5 million and asked help from the parent. Encik parent, help me to pay that 5 million. Okay, the parent says, I will pay that 5 million. They will pay that. They will think that parent will pay that 5 million in full. No. Why? Yes, because parent did not control 100% of subsidiary 1, isn't it? This one, parent only control 60%. So the parent said, okay, I will pay that 60%, my portion. The parent portion will be 60% of that 5 million. Okay. So the remaining 40%? Yes, NCI. Because who owns subsidiary 1? 60% parent, 40% NCI. So the parent says that I'll pay that 60%, you will get that 40% from the NCI. So now two parties will pay it. One is NCI, one is the parent. So we need to record this in separate column. Here, look it very carefully. I don't want to, this is something new. Okay, 5 million times 60%. What is that? 60, get so excited. 60%. That is 3 million under this column. And 5 million times 40% under NCI in bracket. Okay, 5 million is the total purchase price, total consideration transferred. 60% will be paid by the parent and 40% is paid by the NCI. Okay, so this 60 and 40 refer back to the group structure. If you look at the group structure, parent controls subsidiary 1, 60. So NCI in subsidiary 1 is 40. So this is the percentage. This percentage comes from that fact. This is 5 million is the consideration transfer. Understand? So the parent portion, as usual, under this goodwill, but the NCI portion will be in NCI column and should be put in bracket because this one will reduce the NCI value. Okay. Okay. Now, once you have done that, the remaining part will be as usual. So your NCI in subsidiary 2, NCI is 42%. So it is 42% times the fair value of subsidiary 3 was 12 million. So what is it? 42% times 12 million. Oh, 40 something, 5 million. 504. 5040. So this will be 5040. So this is your NCI 5040. Okay, so the total will be 9040, isn't it? Okay, 9040. Saya anjak ke atas sikit lah ni, so they can see. And the fair value is 12 million. So again, bargain purchase. So many bargain purchase today. Let's go lah. Yeah, 2960, isn't it? The bargain purchase. This BP, isn't it? Okay, you need to ask if you don't understand, because I think this is the more challenging part, where students find sometimes a bit difficult to where's the figure come from? This what's this figure? What's this figure? Okay, let us summarize again for subsidiary. No, this one subsidiary 2, subsidiary 3. Sorry, that's what you don't understand, right? This one is subsidiary 3, not subsidiary 3. This one subsidiary 3. Subsidiary 3. So we have these two consideration transferred. One is direct, one is indirect. So direct, indirect, because if you look at the diagram, the parent has 10% direct shares and also 48% indirect shares in subsidiary 3. So that's why the parent control is 58%, isn't it? So you need to calculate both. You need to show both payment, the direct one and also the indirect one, indirect consideration transfer. So that's the difference on consideration transfer part. In this part, the ICT, the amount for paid by the NCI, assume the NCI is in bracket. Don't forget, is in bracket. And your NCI, we have calculated 42% times let's say assume the fair value is 5 million. So from this part down there, it will be the normal one, the normal calculation. The only difference now is in your consideration transferred column. So don't forget, this is your NCI. This is your NCI, and your bargain purchase. This is your bargain purchase. Yeah. Any question so far? Any question? No question. You understand fully, isn't it? This one. All right. If you understand, I want to the next one, the next topic. Okay, the next one will be NCI valuation. I was told by your friend that in your earlier FAR paper, you have been exposed to that NCI valuation. You can value your NCI using two methods, isn't it? Two methods. Can you recall? Number one, number two. What is it? The two methods of NCI valuation. Okay, one is fair value. Another one, fair value, or we call it full goodwill. Yeah, since this one full, one will be partial, or we call it proportionate. Proportionate method, or we call it partial goodwill. Okay, so this one also can be found in your book here. Those who bring your books, then look at chapter 9. Chapter 9, you can see in your chapter 9 the two methods. I think page, can't remember the page, but valuation goodwill, chapter 9. Page 386. So these are the two methods there for NCI valuation. Either use full goodwill or partial goodwill. So in an examination, you can be, the question can ask you that, or tell you that the NCI is valued at fair value. Sometimes it use full goodwill. Full goodwill method is applied in this case. So you understand? Full goodwill means fair value. Or majority of the question is prepared using this method, proportionate or partial goodwill. Okay, so this, the one that you see here, this is proportionate. This is proportionate method. Where we call it proportionate because when you value your NCI has certain percentage here. That's why we call it proportionate. The proportion of the fair value that belongs to the NCI. If you look at this one, the fair value of net asset of the subsidiary was 12 million. Out of the 12 million, 42% belongs to the NCI. So NCI has certain proportion of that fair value. So this is fair value methods. This one is proportionate or partial goodwill methods. Okay. So now let me introduce fair value. Have you gone through any exercises on fair value? Valuing your NCI at fair value. Okay. Never mind. Don't worry. This one is simple. Fair value of full goodwill. Okay. For examination purpose, the best thing that you can ask for is the fair value is given. It can be given in the question. Given in the question. So if the NCI value using fair value is given in the question, then you just pick up the figure and put it in your NCI column. Okay. So for example, now you don't have to copy it. You don't want to copy it. Okay. So let's say I change this. Okay. Parent paid 5 million cash to control 60 shares in subsidiary 1, fair value 10 million. Okay. NCI in subsidiary 1 was valued at RM, let's say 5 million. Okay, if you have this fact, the consideration transfer was 5 million and the fair value of net asset was 10 million and NCI in subsidiary 1 was valued at 5 million. So that means you are using fair value methods in valuing your NCI. So in that case, you won't use this. You won't use this one because this one is proportionate method. So how you do it? You just put that 5 million under this column. So it means that instead of using this proportionate, you will replace this amount with the fair value given. NCI valued at 5 million. So NCI is here. This is the value of NCI, 5 million. Then you will get 10 million. So 10 million, 0. There will be no bargain purchase, no goodwill. It will be 0. Understand? Replace the 40% with the value of NCI. Once the NCI is given, this one 5 million. So one is given, then you just put it there. This one what color? I don't know so what color is it. This one. This time the 5 million. So this, in some past semester exam, if you go through, then the NCI value is given, especially if you have many. You have 3. If you have 3, for example, subsidiaries, then maybe 2 of them are given. 1 you calculate. So that's number 1. Number 2, you need to calculate. So NCI value, fair value, NCI value need to be calculated using share price. Okay, using share price. So I give you an example for this one. So either the amount is given, or you need to value, or you need to calculate the value of your NCI need to be calculated using share price, the share price of the subsidiary. Okay, let's look at this example. So just forget this. Okay, and we start anew. Here, we start anew. Okay, this case, subsidiary 2, parent control 55%, subsidiary 2. Okay, now let's go and look at this subsidiary 2. The NCI is valued at fair value. Let me see this case for subsidiary 2. Okay, number 1, NCI was valued at full goodwill, at fair value lah. So number 1, NCI was valued at fair value. Okay, number 2, parents exchange 3 of its share for every 5 required. Okay, let us assume that we have this case. fair value, valuation, and the fair value amount is not given. So it says that NCI was valued at fair value. Parent exchanged 3 of its share for every 5 shares acquired from subsidiary 2. And subsidiary 2 has 10 million shares outstanding. Parent and subsidiary 2 shares prices on the acquisition date. Parent $2 each, subsidiary 2 $3 each. So you understand? So this one is involving share swap. Share swap, meaning that the consideration transferred is in the form of share. In the form of share. If you go through your book, page, I remember this one, page 359 and 360. If you go back, you can see that consideration transferred can take in many forms. If you look at 359 now, you can see that consideration transferred can be in the form of cash, share, combination, and also contingent consideration, isn't it? Yeah, consideration transferred. On top of page 359, A, B, C, D. What they are? Can be cash, can be shares, can be in the form of cash or shares, and also contingent consideration. So I need you to understand this because I may ask you. What is contingent consideration? Next page, 350. Contingent consideration. So since you are discussing the consideration transferred, so I think it's worth that you need to look at this as well, because many students think that consideration transferred should be in the form of cash only, or share, and cash and share. And you may also have contingent consideration. So what's contingent consideration? It's something like a promise by the parent that it will pay in future some sort of cash or whatever payment, provided that the subsidiary meets certain criteria. For example, let's say when the parent wants to purchase the subsidiary share, in the agreement it says that the parent will pay 1 million in 1 year time, provided that the subsidiary profit is not less than, let's say, 10 million. So this is something in future, isn't it? Because at the end of the year, we will look into the profit of the subsidiary. If the profit of subsidiary is 10 million, then the parent will pay 1 million more. If not, then the parent will not pay. So that's why they are called contingent. Still remember contingent? Still remember your contingent liability? Contingent liability. Remember? You came across that, didn't it? Contingent liability. Why is it called contingent liability? Because the liability is not sure, isn't it? It depends on the outcome of the court, isn't it? Court says that you are guilty. Okay, I pay. You are not guilty, then you don't have to pay. So that's why contingent liability. This one also contingent consideration, because it's something like payment in future. So what happened to this contingent liability? Will we include them in the consideration transferred? Yes. So if you need to pay cash, 10 million, share, 10 million, consideration, contingent consideration, 2 million, 10 million, 10 million, 2 million. So it becomes 22 million. Your total consideration transfer will be 22 million. Of course, it will not be 22 million because the 2 million will be paid in future. So you need to take the present value of that 2 million. Calculate it now. Maybe, what happened? If 2 million in future, now, is it the value more than 2 million or less than 2 million? Fair value. Present value. Present value, future value. You have learned in it in your finance paper using the 10%, 8%, whatever percent in it. You go back and you discuss. But you need to include them. Cash, share, in our case, it could be considered contingent consideration. I think 1 or 2 past semester exam has that amount, that issue. So many students miss the contingent consideration. Okay. So that's something that you need to go back and then you can at the weekend you discuss. So now let us look at this, where we have this share exchange. So now, if we have this case, then what is the, if you prepare the schedule, again, the goodwill, and then your NCI, and then group retained profit. Okay, consideration transferred. So now your consideration transferred in the form of 3 shares for every 5 shares acquired. Okay, you control 55%. Right, 55% of subsidiary 2. I just redraw this one, 55% subsidiary 2. And this subsidiary 2 has 10 million shares. You purchase 55% of that share, but you don't pay cash. Okay, you get the cash. This is involved. We call it share swap, isn't it? You give me my share, I give you my share, isn't it? You give me your share, I give you my share. Okay, share swap. So now you need to find out the value. What is the value of the share that you give to the subsidiary? How do you do that? Okay, number 1, okay, follow this step. Number 1, identify number of shares acquired. Number of shares acquired. So now I want you to identify what's the number of shares that the parent purchased. Unit. This case, parent control 55% or purchase 55% shares in subsidiary 2. Subsidiary 2 has 10 million shares. So how many shares that you purchase? Unit? 5.5 million, isn't it? Susah. Not difficult, isn't it? Not difficult, right? So the answer will be 5.5 million. 55% times 10 million, isn't it? Okay, 5.5 million unit. Okay, so now number 2, calculate number of shares transferred to subsidiary 2. Okay, number 1, you identify how many shares that you purchase. Now you identify how many shares that you transferred to them. Okay, sekarang you dah dapat 5.5 million. You get that 5.5 million from them. 5.5 million share you get from them. So now I get your share. I don't want to pay. Cannot. So you need to transfer your share to them. So if you have this term, 3 shares for every 5 shares acquired. So the mathematics one will be, yes, very good, 3 over 5 times 5.5 million. So the answer is 3.3, isn't it? 3.3 million. So the answer 3.3 million. So what is this 3.3 million? This is the number of share of the parent that will be transferred to the subsidiary. Okay, let me get clear. 5.5 million is the share that the parent get. 3.3 million is the share that the parent give to the subsidiary. Okay, number 3, you calculate value of the share. of the share transferred. So you transferred 3.3 million share. Now I ask you, what's the value of that 3.3 million share? Ringgit, in ringgit. So this is number times parent value $2, subsidiary to $3. So now that 3.3 million, whose share? The parent share or subsidiary share? Parent share, isn't it? So now what's the parent share? 2 each. Okay, very good. So this one, 3.3 times 2, 6.6 million ringgit. Then only this 6.6 million is written here. Okay, so this is the mathematics. Step number 1, you calculate this 55% times 10 million. Step number 1. So you get 6.6 times 3 over 5, the exchange rate. So you get 3.3 times the parent share. Parent share. So you get 6.6. So then only you get the answer, 6.6 million. Consideration transferred is 6.6 million. Any question? Anything that you want to ask? We only have two value here, the parent and subsidiary. So don't confuse. So at this stage, this is the parent shares value. Okay. Now your NCI. Okay. So now NCI are using fair value. Okay. NCI now. For NCI, this one is your consideration transfer. Consideration transfer, this is the step. For NCI, number 1, identify number of shares NCI held in subsidiary 2. So how many shares NCI has? 45%, isn't it? So 4.5 million. Okay. Identify the number of shares that NCI has in subsidiary 2. So if parent has 5.5 million, then NCI should have 45%, or 4.5. So the answer is 4.5 million. Okay. 4.5 million. Boleh faham? Because 10 million minus this one, right? Number 2, what's the value? Okay, calculate, identify lah. Identify value of subsidiary 2 share. What's the value of subsidiary share? $3, isn't it? RM 3. So number 3, 1 times 2, 4.5 million times $3 each, 13.5. 13.5. So that's your answer. NCI is valued at 13 or 45% times 10 million times RM3. NCI shares. This one, NCI, the number of NCI shares in the subsidiary. This is the value of one subsidiary share. And this is the value of NCI. So now this is how NCI is valued at fair value. Okay. If you use proportionate, you will have that percentage here. NCI, what is it? 45% times the fair value of net asset, isn't it? But this one, you identify the number of shares it held and what is the value of one share. Then you times this two and you will get the value of NCI. So NCI here, 13.5 using fair value. Okay. So I think we need to do more exercise on this one. Hopefully in the tutorial, this coming tutorial, we will do some exercises on the items that we discussed today. What are the items we discussed today? The group structure. The group structure, and also how you prepare the schedule under different methods, under different group structure, right? The fellow subsidiary, I think fellow subsidiary I will forgo lah. That one is easy. Maybe vertical and maybe mixed, isn't it? More interesting. Others, no challenge at all. We end our class. Assalamualaikum warahmatullahi wabarakatuh.